could we pick more taboo subjects to make everybody mad at us? It's like, could we pick a subject that's like more impossible to figure out?
The big problem is that I'm thinking this looks a lot less like Norway, which is a great example, and a lot more like, I don't know, Libya, Venezuela.
Sovereign wealth implies there's some type of surplus, to the point you just made. So I need to know there's a surplus and what the result of that surplus is.
VC and private equity are just levered up equities, and private credit is just levered up bonds, right? Like there's nothing new under the sun.
I see owning Bitcoin as a hedge against the demise of the United States. Like, I fundamentally think that's the trade.
But then
so it's bizarre for the federal government to
Right,
own the thing that is effectively a hedge against its own demise.
One, don't build your dream house right when you retire if you're not used to construction or dealing with contractors.
so true.
Two,
So
roads are for cars only. And three, if you could pay somebody else to get on a ladder, always do so.
Those other finance podcasts you're watching, those are clickbait. This is clickbeta. Now, nobody Googles nothing. We have one pre-agreed upon topic we're going to digest, and then we each have a surprise topic for the group, something we want the others to talk about. The mission is simple. All three of us talk to people in the real world all day, every day. We want to show you, the viewers, how we think about this stuff, how we think through it, how we process the information behind the scenes, and the angry texts we send to each other when we can't understand things people are asking us, or government or organizations are telling us we have to do. I'm Matt Zeigler, joined today by, move over and Nora at the Oscars. It's Rabbit Hole on Excess Return. So it's Dave Nadig.
Ella.
Say hi.
I know that all of a sudden I'm like a sex worker. How did that happen so quickly?
You never know in this day and age, my friend. And of course, don't you dare Adrian Brody my orchestra. I see you winding up there. Don't you pianist meta commentary my moment. It's the man with more substance than Demi Moore, Jason Buck.
I just like how Dave he went with the sex worker. Like you weren't like the Russian oligarch or anything. You could have chose any of the characters from Anora. You just,
I mean, he picked the name Anora. I don't know.
We got to go for value. We got to go for value here, which may be perfect segue into the topic of today. This is where we're starting. The U.S. It's all over the place, especially like this last weekend. I feel like something broke. I was deliberately offline over the weekend, and then I look and I'm like, oh, crypto summits and tariffs and all this stuff. We're going to talk about a strategic reserve, a strategic slush fund, this whole thing. Like, what is going on? Dave, I'm going to you first. Do you even have like a working definition of your mind? How do you, if you hear strategic reserve or any of this stuff, where's your brain even start?
I mean, I think of like actual sovereign wealth funds, of which there's some really good examples. Like, Norway comes to mind, the largest one in the world. And like that model makes sense. You take an asset that a country owns, like say your offshore drilling rights, which I think we can all agree, we probably all own those, right? That's not particularly owned by Massachusetts or California or something like that. Take the licensing revenue for that, stick it in a fund. There's lots of things I can think we could do that with. Airwaves, right? We sell the airwaves off for people to use. We could put that in a fund and say we're putting the wealth of the country in a bucket in order to do something interesting with it later, to give us resilience for crises, things like that. The big problem is that I'm thinking this looks a lot less like Norway, which is a great example, and a lot more like, I don't know, Libya, Venezuela. Like there are a lot of failed sovereign wealth. I was gonna say, I think of all of those failed sovereign wealth funds and why they failed. And to me, they all fail because there's too much involvement from the actual politicians. They're not governed well and they become corrupt. But at least in the case of like Venezuela and Libya, they started out okay and then they became horribly corrupt and influenced. This one seems a little bit like we're taking we're trying to get ahead of ourselves. We're going straight for the corruption out of the gate. And then we're going to catch up and figure out whether or not there's actually something utile out of it at the end. So that's my hot take, which is I don't see what business we have being in a sovereign wealth fund when we're running massive deficits. I mean, they're sort of by definition not excess when you're, running deficits. And I don't understand why we wouldn't be investing it completely broadly, right? It's not like a stockpile. It's not like oil or PPE.
It's not a strategic reserve.
Right. It's not like a thing that we know we're going to need like I don't know, tires for tanks or something like that. But I don't know, Matt, what do you think? What do you like? Are you down for the strategic reserve? Are you like all in on this?
Well, this is what I'm trying to understand, like what the purpose is and where there's so many things in these policies that I'm just, okay, let me play it out for 5 years or 10 years and then see where we land when we do this. So even if we say we move into the direction of this, so first off, sovereign wealth implies there's some type of surplus to the point you just made. So I need to know there's a surplus and what the result of that surplus is, just in classic budgeting language. Where's the surplus? And then how does that result in some corresponding balance sheet asset that we want to repurpose in some way? And so first off, I can't understand where this is coming from in any intelligent way. And then second off, I don't understand where this lands in 5 years, because I don't see the strategic reserve asset. I don't see what are we sharing in the country's wealth, or how are we repurposing this as a creative either overlay to the tax structure or something else to redistribute what this is worth to our entire country. I just feel horribly confused about this, and I can't articulate anything intelligent with what's the plan here. Buck, you got anything on this? Like,
what's the plan here? You're assuming there's plans. I just think like this
No,
question, you guys are
I'm
setting
not.
us up for failure. It's like, this is like just a topic where everybody's going to hate us to talk about all the asset classes like that, from Bitcoin to gold to oil. Like you're just setting us up for failure.
I'm just going to put all the tickers on the cover, little
Yeah,
fires on
With
each.
big down signs.
Yeah, big down arrows. Yeah.
But I want to like almost differentiate it too. Like we're talking, a strategic reserve came up, sovereign wealth fund. Let's separate those
Okay,
for a
let's
second.
define these.
Good
'cause this
idea.
is
Yeah,
important. Please.
Because like, okay, like you said, we've always had like a strategic oil reserve, going back to the 70s, and understandably that makes sense, right? To have a strategic oil reserve that we can tap in case, to smooth out any oscillations, makes perfect sense. That's something you can actually put into a reserve. But now when you're talking about a strategic reserve with Bitcoin, I think it'd be analogous to having some sort of strategic reserve in gold. And my first question would be, one, why? Not only Bitcoin versus gold or gold versus Bitcoin, but secondarily, like we're on a fiat currency, like why do we need these reserves in the first place? So I'm not even understood what the general point would be, especially as we, went off the gold standard in 71, 72, like we've been on, fiat currencies and non-fixed rate exchanges for almost 50 years now. So it seems kind of an anachronism to even think you need a reserve. I mean, yes, if you have a cataclysmic scenario and US government somehow defaults, even though they can print their own currency, then maybe in intervening years, you might need a little bit of gold or potentially Bitcoin, possibly. But I don't see that kind of defeats the purpose of like the government, the Fed, and the Treasury, especially in the fiat currency world. So I don't understand. And then going back to the sovereign wealth fund, so then we can kind of toggle back and forth. I can't remember if we did talk about this last time, whether it's Norway or you could even argue Alaska, and Dave, when you're talking about like the offshore drilling rights, et cetera, that going back to the populace, is this a fallacy of composition in the sense like this works for smaller countries that have very specific industries and maybe doesn't work for, the United States in general. And maybe we can get into that further on whether that sovereign wealth fund is like, was it Brad Gerstner's thing, like, prosperity for America, like every kid born like is now getting like $5,000 to $10,000 in S&P stocks. And we can start going into the details of that. So maybe I'll stop there in case you guys want to like start picking apart like strategic reserve versus sovereign wealth
So are there any good examples of non-concentrated sovereign wealth funds, like non-concentrated industry sovereign wealth funds, where somebody is like, we have a fairly diversified economy in that sense, right?
I mean,
Like,
Singapore also has a huge
Okay.
sovereign wealth fund, and I believe that is just sort of funded by surpluses. It's not like a specific industry or a specific Singaporean asset that's been put into that. I don't have a sense of how big that fund is. I know Norway is the giant one. I think the Singapore one's pretty darn big, and I think it's just invested in a global market portfolio, kind of like what Norway has done. Although Norway's been pretty tactical and used it sort of as political leverage when they've wanted to, frankly, as they should, right? I mean, that is a lever that they have on the world stage that they would not have because they're Norway, right? So I think that makes sense. But let me throw this back to you, Jason. Should we have a gold reserve? Like, should we just sell all the gold in Fort Knox? Like, to your point,
There's
I
6
can't
people
come up
left
with a great
watching
case
this
for a
that aren't
Bitcoin
angry at
reserve.
it. Could you please get rid of them?
seriously, just set
Get
it
rid
up
of
for
those
failure.
people.
By the way, Dave, in Singapore, it does make sense though. Like, right, you're an island nation based on entirely on shipping. You have no natural resources. Like, it's totally understandable why they have one as well. And like you said, it is fairly sizable. No, that's my question is like these anachronisms, like going back to fixed exchange rates. Do we need a strategic reserve in gold? Like you said, let's not even argue Bitcoin. Do you need in gold? Do you need any sort of like quote unquote commodity monetary reserve. It doesn't necessarily make sense to me in a monetary theory, like monetary operations world, where we're not on fixed exchange anymore. It's a fiat currency, and we can print as much currency as we want. So I don't see how that makes sense to me. Obviously, you have the constraint of inflation and everything else, but I'm not sure what that strategic reserve would do for you of having monetary substitutes in a non-fixed exchange world. Do you guys have any reasons for that other than like cataclysmic scenarios? But then again, like almost going back to what Matt was saying, if we know our Peter Zeihan, is like we have all the natural resources. If we get into that cataclysmic world, is gold really as valuable as maybe our ruminant animals and our water sources?
I come back to this one over and over again, and this is back to and the idea of a Singapore or somebody else who have this. Like you have an obvious reason on why you would have the surplus and then want to repurpose said surplus into that thing. When we talk about like China and Russia, even as the examples, it's like China has the problem of they have too many people, or they have a lot of people and they have a shortage, extra Peter Zeihan on this point. They have a shortage of like energy. They have a shortage of stuff for foods. So Russia is a great partner because to China in this sense, if great partner.
Lots of land.
Yeah, exactly.
Not
we have lots
people.
of land, we have lots of food, lots of stuff without the people and lots of energy. So there's this weird complementary relationship that obviously we're injecting chaos into all this other stuff. This is the where, like, if you're going to have a sovereign wealth fund or something, you should have some type of trade relationship or whatever else that results in a surplus that now you want to repurpose.
Right.
In America's sense.
But there is, I mean, look, I'll put on a very, very thin and, porous straw hat here for straw manning this. I could, here's an argument that would not sound crazy that I have not heard yet. Like we have all this gold in Fort Knox. It's currently valued at $46 an ounce. So we could, and people have suggested, maybe we should reset the mark on the gold that we have, which would take it from being in sort of an irrelevant asset to close to, I think about $800 billion, $900 billion in gold is what we would have. If somebody came up and said, hey, you know what? We have a sovereign wealth fund. It's Fort Knox. It's got $900 billion in it. What we're going to do is diversify that. Okay. I like, now that's an argument I could say, okay, maybe we shouldn't have all of our, stored assets in gold. Maybe it should have, like the Japanese have done. Maybe it should just be, S&P 500 equities. Maybe it should be crypto. Can't figure out why it's Cardano, but like I'm not a crypto guy. So, but if you were just talking about diversifying what we already have at Fort Knox, I can at least understand the logic there. But can you even get that far with me?
Yeah, but that's really interesting because that's again like a surplus that already exists somewhere that's been stored on the balance sheet, and now we're talking about reapportioning that in some way. And if AI Richard Nixon could be the voice who said it in public policy, I'm all aboard.
My God, AI Richard Nixon. We get
even
AI Hunter S. Thompson to chase him down.
You could ask.
But even like put on the other string, Dave, is like why the certain cryptos that they put out there, are we just legitimizing crypto when our president has put out a meme coin? Like what are we actually doing?
Well, I mean, that's a fake surplus.
That's because
Sachs
fake
surplus. Right.
That's
not a surplus. Somebody has to sell this into the reserve at this point. Like we're creating our own way to create that surplus, and that
we're exit liquidity, right? Like that isn't that.
Well, but I mean, look,
private equity taught us all a lesson.
This feels bad to me, but it seems like where we're headed is we're already talking about selling off a ton of public land to logging, and like literally selling it. We're selling, last I checked, 150 federal buildings. If we're going to mark up and then sell our gold, are we effectively just divesting the U.S. of its assets? That feels like what we're doing. And I could even come up with a case where maybe you should do that if what you were doing with that is paying off the debt. Like, I mean, if you're a financial advisor and the U.S. was your client, you might sit there and say, well, why are you sitting on all this gold when you got this credit card debt?
Just
like, that's
Cullen
a financial advisor conversation.
Cullen Roach is out there. He just died. Him and Warren Mosler both just died.
Unfortunately, I was actually I just spent a lot of time with Warren Mosler a few weeks ago, as you guys know. And to be sympathetic to them is like, what we're calling debt deficit is really just, American private savings. So like if the boomers don't want all this money, they can give it back and we can pay off the deficit. That would be another way of looking at it, because it's just double entry bookkeeping, right? Like you got to run a deficit on one side to have a credit on the other side.
Sure. I don't think that's the way anybody's actually talking about this, though.
But the way you did, like, that's when we analogize it to like a credit card or home
Right,
economics.
right.
We
No, and
we
look,
can't
I'm
print.
not trying to
Yeah,
make the argument that the federal
yeah.
budget is like a business. Believe me, I'm not trying to make
We
that
know you're not
argument.
doing that. So but like how do okay? Here's the question for both of you. In a good scenario, what could we do with this? Like, A, where would it come from? I love the Fort Knox scenario.
Yeah.
I'm on board for at least talking about diversifying existing asset. But say we do the government buildings, we do the other stuff. A, do we have any idea how much that's actually worth? And then what could you see as a good use of this money if we raise this sovereign wealth money? Like, Dave, what would be a good use to you?
Like, what should we invest it in?
Yeah, like what would you want to see it invest in?
I mean,
have this pop?
I'm just, an old school hippie. So for me, the idea would be something like, I don't know, invest in the actual country, like infrastructure. Like those seem like the kinds of things we should be investing in: bridges, dams, the military to some extent.
I can't just
like
turn
all
that
the things
old-
that we're supposed to be spending money on seem like the things we're supposed to be spending money on. If we were going to take money like out of our strategic reserves and put them to work somewhere, I would do it in the form of infrastructure, which is what I thought we were doing, but I guess we're unwinding that too. So, mostly it seems like the crypto strategic reserve just feels like naked, like bag boosting. I can't figure out any actual use case for the federal government to own a lot of Bitcoin other than number go up.
Well, that's the question for you, Matt. Like, do you have any like? Let's get rid of the other coins they maybe threw out there. Let's just say it's only Bitcoin. What's the steel man for having Bitcoin in the strategic reserve? In a strategic.
I'm with you in the sense that I don't know what the answer to this is because I don't know how we actually apply it. I don't know if are we defending against something that is ignorant of seeing? Are we putting something on some form of a blockchain that I don't yet understand where this is a required means of doing this? Like what? I just can't understand why, and I can't seem to get a straight answer from anybody about.
I would
It's
assume that
not like
Bitcoin
this-
maxis is like they basically want to repeg the US dollar to Bitcoin would be their ideal in this scenario.
Yeah,
So
because
we're
we know
winding
how
the
well
clock.
fixed exchange rates work.
Right.
That's classic, clearly.
But that would be the general idea, right? Dave, am I correct?
Well,
Like
but
that's
but
steel
but
man?
here's
Or-
the
In
part
what
of the problem
scenario
is
again?
that I still see Bitcoin as an anti-dollar play, right? For
Right.
Bitcoin to be $500,000 a coin, you have to imagine something has happened with the dollar, right? Right? Because it seems unlikely that the utility of Bitcoin
Which
goes
means
up
something
by
has happened with
500%.
trade effectively.
Right.
Like,
Right. So like I see owning Bitcoin as a hedge against the demise of the United States. Like I fundamentally think that's the trade.
but then
So it's bizarre for the federal government to
Right, that's-
own the thing that is effectively a hedge against its own demise. It feels a little bit like wanting to have your feet in both sides of something, like if the dollar's great, then we don't care about the Bitcoin. If the dollar's garbage, I guess our Bitcoin's worth a lot.
and then what would even if you had the Bitcoin, that's not going to bail you out. You can't buy yourself out of that problem.
Yeah, I mean, I guess maybe you can manipulate the price of the dollar with the Bitcoin. I don't know.
So
I mean, it
again,
feels like
yeah.
we're trying to add Bitcoin to the monetary policy machine. I don't get it.
All right, well, let's go with the second part of the question then, because I can't understand the strategic reserve
Okay,
point.
we're all on the same. We're all on the
And,
same. page.
so
I feel
the
better
sovereign-
about myself. Okay.
So the sovereign wealth fund, and I hope I'm not repeating from last time, but like what I was getting at too is whether it's Norway, Singapore, Alaska, whatever. Do you think in size this makes sense for like an economy the size of the United States to have a sovereign wealth fund, or does this only work for smaller countries that are highly concentrated in singular industries or don't have natural resources?
I don't think it makes a ton of sense for a country the size of ours to have a sovereign wealth fund unless what we're going to do with it is effectively sort of a Japanification of it, right? Sort of a backwards privatization, socialization thing where, you end up with the government being a major investor in quote unquote private enterprises. I would argue that there's a very slippery slope between that and say the CCP, right? Like how much of a company do you have to own before it becomes a state-owned enterprise? Both in terms of actual dollars, but also just in terms of influence, right? And do you really trust the stewards of a federal sovereign wealth fund to be, effective board members when they own 10% of every company in the S&P 500? That just seems like bizarre to me, and really just very anti-capitalist, right? Very anti-democratic, very much sliding towards something that looks much more like China than the way we run things in the US or plenty of other countries where you've got massive state-owned industries Russia, Brazil, et cetera, et cetera. So it's really tough for me to see how that's particularly American as a way of thinking about it. If anything, I've been hearing my whole life about how America needs to get out of the way of business, which
I,
buying it doesn't seem like getting out of the way.
I'm with you on that. I'd be much more open to something with like public-private partnerships in the commodity related spaces. So if we're going to free up a bunch of money for oil and gas drilling or building out nuclear grid or whatever else, like give me a higher level backstop that's not the state level for like partnerships in these programs to build this out and improve energy infrastructure, improve transportation, improve all this stuff. Hey, maybe even with our neighbors to the north and south a little bit, to like say, let's figure out a way to collectively reinvest in some of these smaller industries that every other industry is built on top of.
Yeah, I could see that. And I could
Is
see
that
the
too
flip side of
hippie-ish?
that too. I could see that we invest in the sort of core infrastructure, which is currently private, say pipelines, right? Like
Right.
I could see the United States saying, hey, you know what? We're going to look at, railways and pipelines and sort of all this real boring old industrial backbone. And we're going to effectively start, republicizing that, re-socializing that by bringing it more under the control of government, more under the ownership of government. Nobody's talking about that, but like I could at least understand that angle. I'm having a much harder time figuring out Solana, or any of that. That just seems like picking winners, right? And I get I get that we want to be part of the future thing. I get all of those sort of those animal spirits. I get how you get worked up about wanting to do this. We should be at the front end of tech, blah, blah, blah. Totally get it. I don't think the way to do it is by buying a lot of it. I think the way to do it 7, 8, 10 years ago was by regulating it well. I don't think we're really going to do either now.
But I think to me, what you were alluding at earlier too is some of the sovereign wealth funds that have had corruption and stuff in the past that was much more for like endogenous industries and stuff. And I think we're in a new territory, or a new map, so to speak, with when you have like Norway, Switzerland, Singapore, they're usually diversifying all their assets into S&P 500, right? And
Right.
so kind of was
We're
like
the diversifier.
yeah, we're the diversifier, and it's going into our company in the S&P 500. And so it was a kind of another question I had for you, Dave, because you recently got a shout out on Mike Green's newsletter. As you're the Dave in the past that he's arguing with. But one of the things was like some of your questions around like his passive thesis is like, that's what I wonder is like, how much does that relate more to like just domestic target date funds? When you have the biggest sovereign wealth funds in the world, they're just using the S&P 500 to get their access to their investments. What did those inflows look like? And then what happens when we do have a crash? One, to those sovereign wealth funds, but also the S&P 500. Like, I'm just curious if you thought more about just like beyond the elasticity argument for, target date funds in the US. Now you have, these massive, multi-trillion-dollar sovereign wealth funds like investing in the US.
Right. And they're much more capricious, right? I actually worry more about them than I do about the target date funds or the boomers rolling over, right? I think that, we're in the middle of a couple-day drawdown. I'll be surprised if we end this week down because I think that the structural flows will keep beating in. Now, I think what's going on in the sort of the diplomacy sphere actually puts at risk things like Norway and Japan and the UAE suddenly going, yeah, you know what? We're going to shave down our US exposure because it's really clear that the world is changing. And while there's a lot of story about which I believe about how corporate America is going to be the winner at the end of all this, and I firmly believe that doesn't mean that the stock market's going to go straight up. And I would not be surprised to see for the next 2 years a pullback in a lot of those sovereign wealth funds. Not in a giant, we hate America, we're selling all our stocks, but just, we were 40%, now we're going to go down to 30. Those could make a really big difference because those are, again, sort of structural, non-repetitive flows. That would be bad.
Yeah,
I don't know if that answers your question.
Even though it helps with somebody that's globally diversified, I got to say the last 35, 40 days have been finally, we're getting some little bit of but I'm not holding my breath. I'm waiting, like you said, for it to mean revert, and we'll have to look at the dates because we're coming up here on Q1. So like you're saying, those structural target date flows have got to be coming back in heavy into the market before the end of this month too. So I got to figure out the exact dates on that.
And I also just think that you're not going to convince a generation of American investors to invest outside the US in spades in the midst of all this is going on. There'll be edge cases, we're screwed. I'm going to just, EFA all the way. There'll be people who say that, but I'm not pulling the trigger and selling all my stocks. I think that would be a dumb idea right now. I suspect that the sovereign wealth fund thing is going to peter out right? I think to do that in any real size with any real ability, it's going to require legislation, which we won't get. So we'll repurpose the 20 billion we already have from seizures in Bitcoin, and we'll put a bow on it and hand it to Besant and call it a win. But I don't think that's going to change much.
Well, related to that, Matt, what do you think? Like David understand is like these are large cargo ships, even if it's like individuals in America and target date retirement funds in aggregate, they're large cargo ships. So like we could even potentially see like, if you look at the broad arc of history, stocks and bonds end up correlated more than they're uncorrelated. But like we just had this unbelievable 40-year run. Like, could we have even seen the death of 60/40 started in 2020, but it just takes so long for people to adapt. Like we're right now, like MSCI equity is at its largest amount to US again. It's like, is like Dave saying, like, do you see that with your clients and everything? That like, it could be 5, 10, 20 years and people never adjust their portfolios and they're just holding on to it like a previous period.
Yeah, I think there's some of that going on. And I think that's probably, we're feeding into that by the introduction of the TAMPs across the RIA space and all this other stuff, these static asset allocation models that's sort of been run and then tweaked to reduce. EM exposure was easy to kick out. EFA exposure was easy to dial down. And how many people are left that are truly tracking back to the global market, financial assets portfolio or whatever that target is? Far more for us, we believe in what you believe in. So it's like we still have that stubborn international exposure. We still have stuff where we might lean a little bit more on active managers outside of the country than we have in the past. That's been a steady trend. But the 60/40 works, and it works so well for the last 40 years in that mix because you have healthy growth and basically stable to falling inflation. And that's a perfect example of where stock and bond correlations are going to do what they do because everything's lined up in the same direction. And all you have to do is look outside of that data set and go, oh, if I have strong growth and strong inflation, well, that breaks. And if I have, bad growth and bad inflation, well, that breaks. And if every way I mix and match that, except this one scenario, 60/40 is not a good answer. And so portfolio construction for years has been, you pay the price. Friend of the show, Brian Portnoy, diversification means you always hate something that you own.
Yeah.
Always having to say you're sorry.
You always have to say you're sorry.
Yeah.
A brilliant way to put it, but that's the truth. Am I diversified? Tell me what you hate that you own right now. That's the test. And I think this is a case right here where people are going to wake up to saying that. What do you think?
This feels like a great transition to my secret question.
Let's go to your secret question.
My secret question for the two of you is, given everything that we've seen in the last couple of weeks with a couple of launches in this space, do actual normal wealth investors need private credit? I just broke Jason. Why is that? Why did that break you?
He's glitching. I think he's smoking. Is there smoke coming out of his ears? What?
No, because I don't know the answer, but my gut says probably not. But then again, you look at what's in this Apollo fund that State Street launched, Priv, and it's a bunch of, which we know nothing about what's under the hood, but it looks like a bunch of stuff that's, rated really high. It's paying 6.5. I don't know. That doesn't seem awful. But is there just so much hair in this you wouldn't touch it? Jason, come on. You like run real money for real people and real institutions. Private credit, like, are you salivating to get access to this stuff? Are you buying it elsewhere?
Well, let me start with this is your department. Didn't the SEC say not so fast and they came back and
No.
said, well,
The SEC said we hate you, but you can trade anyway because we got rid of Chevron deference, so administrative law doesn't matter. So the product's trading and the SEC says it's bad.
But didn't they come back and say, like, we will actually buy it back, like within 7 days notice ourselves or something like that?
No, they had to disclose the deal with Apollo, which is that they have to put out a bid 3 times a day, which they have to hit within 15 minutes, and that they're only ever bidding on 25% of the portfolio. That's what we know.
So to me, in general, VC and private equity are just levered up equities. And private credit is just levered up bonds, right? Like there's nothing new under the sun. Everything's either, equity or debt, right? And then pick your flavor and pick your poison. But I will say, I think it is interesting talking to more institutions and everything. I do think it's interesting why they love PE and PC is because of like the mark to model nature and how they can keep their seat longer. As Cliff Adams would say, it's volatility laundering.
So it's just because they're not marking it. That's the only reason anybody loves the stuff is because it looks like there's no volatility because you don't bother setting a price.
Right, but think about the value of that. Like if you're sitting in an endowment or pension, as an endowment or pension, you're sitting in that seat and you're competing against the other endowments or pensions, right? Or your clients, or you have to go to your investment committee board and you're like, hey, we've been only up and to the right. We've never had any down years because we're not marking these things to where they should be. it's like, it's a no-brainer to put yourself in there and lock it up for 10 years, right? Like, that's why, like, to me, it's like almost like they built the perfect product for institutional allocators. And it's not so much more like, is this valuable for us or what does it be? And then you could talk about what are the spreads, over T-bills, et cetera, over the 10-year.
Because they're literally
and is
never
it
going to
valuable?
sell. That's why
Right.
it has value, is because they really are intending to hold the stuff all the way to the end, which means the price really actually doesn't matter between now and then, which is very different than an ETF, which is trading daily. So that's fair. That's fair. But like, Matt, like, you're working with like real people, not institutions. Like, is this a topic? Are people chasing this stuff?
So nobody's chasing it. The phone is not ringing off where people are like, oh my God, get me access to that private credit fund that I now can trade an ETF of. And God help the people who are just running blind into that stuff. But private credit is something like, as a vehicle, like I've been using for 10 years. The firm we have, we allocate to it most clients. Like it's rare that a client does not have some exposure to private credit. And these are the things I can tell you about private credit. Private credit pre the last few years, and especially like pre-regular access that I had, you had to be at least accredited, if not qualified. So we did this in a lot of pension plans in a 0% interest rate world. Because if you have a pension plan, and I'm talking like cash balance pension plans up to like large corporation pension plans, you have money with an asset liability match and a 0% world, we had to figure out how to get to that 4 or 5% hurdle net of fees. And a really compelling way to do that was to do like a CD or a treasury ladder or something else ultra safe that got you to like 1 or 2. And then, to Jason's point, lever up your bonds to solve for the other piece. And if you can solve for that with a relatively stable mark to market, like, not that there's no risk, it's just that if you're probably going to hold this for 5 or 10 or 30 years, you have a very different way of viewing what this tool looks like inside of the portfolio to get the return profile that you're reaching for. So that was the first place I saw used. Now with regular clients in the asset allocation models, we literally are looking at it in a post 0% interest rate world as, number one, it's been a stabilizer against the ag. It can reduce the way you profile out your duration risk and everything else. The income and coupons can be used for rebalancing. So it's really effective tool. We usually don't reinvest that money directly into the funds. We want to selectively decide how we do that. But we very much understand the role it's taking of, you can't have any liquidity risk tied to this thing. Like even in an interval fund structure, this has to be money you can't touch and you have zero plan of touching. Otherwise, the whole thing falls apart because you want to just be extracting income to put somewhere else and be using that stability that you're getting from the NAV of this thing, which you never want to believe anyway. You just go, this is what they tell me. This is fine. This is my placeholder. But I'm holding this here where the income gives me my rebalance potential. And the other thing is just as when I balance out my capital market assumptions, this is how I build the portfolio out of that thing. What we have seen in the last couple of years is lots of products have come to market, and Lee Bodoris, our director of research, has written and talked a lot about this publicly even, is a ton of absolute crap product in this space where people are reaching because effectively what you're doing is private banking and lending. Right. So these shops are coming in and making loans for disastrous businesses. And we've seen some stuff that gets stamped in this way. We even exited, we had a manager or two that we've exited in the last couple of years and been like, nope, they don't meet the standard anymore. If you don't have the due diligence process to actually look at the lending mechanism inside of these things to say, I want to be lending this money in perpetuity through this vehicle, you really should stay away. And that's like, we need full-time people just looking to do that due diligence to even say, you can sit with this. And when I see ETFs of it, I'm terrified.
These are good answers. I like this. This is actually might be helpful.
Before I get to Steelman of the pro side to get some of those but because Matt hit on it right there at the end, I think, Dave, that's more in your wheelhouse, is like, you're just seeing it all. Like historically, trying to put a liquid wrapper over a liquid product just always blows up, right?
Right.
Well, I think the ETF has been a good vehicle for testing the edges of that, right? So it's like, how illiquid can you go? I'm personally, I'm drawing the line at pseudo private CLOs. And I say pseudo private because private CLOs actually trade. So like, the Bond Blocks has a product there. I think that's about as illiquid as you can go. Everybody can still look at those things. You know what you're getting. You can look up the terms. It's relatively transparent. The stuff that's in the State Street stuff feels like it's going to that next step where it's like your comment about matching, like really thinking of it as an asset liability match, in which you don't care about the daily fluctuation of the basis. That is a really good answer, but it also, to me, says really doesn't belong in a daily liquidity vehicle.
I think private credit makes a lot of sense in an interval fund structure with like maybe monthly, but probably quarterly or longer liquidity. That's a great way to do it. But you also should be building that model portfolio with some type of asset liability matching logic behind it. And to try to say that you don't have the liquidity on this is you are just begging regular people to go, ooh, 10% yield or whatever the hell it is.
Well, yeah,
and
that's
then
how
just
they get sold.
torch themselves because that's what's going to happen.
Yeah,
that
that's
will
exactly how they're gonna
happen,
get sold.
guaranteed.
It just
All
also
right, who's
shows
got
me
another?
like, well, I just want to finish that up. Like how much things have changed like since 2008, where now like you have ETFs that are like a basket of CLOs, like that are daily traded CLOs. Like just that we like everybody forgets we live in a totally different world now. The one thing I'll say, like on the pro side, or like what's understandable is like also since 2008, banks have not really lent much in general, and so that's
Which
why
is
you
why
had
private credit has
exactly
No,
private credit.
that I
lending
totally get.
went away.
I
Yeah,
get
so,
where
like,
the
who's gonna
demand
lend?
comes from on the buy on the borrow side. I totally get that.
But like, and then Matt said, then you need to be able to vet each of those firms and see what the quality of their underwriting is and everything. But like, we got rid of all the private lending. I mean, you could argue this is maybe now the high yield market, et cetera. Like, and so if people are stretching for that yield, like where else are they going to get it besides going on this private side? And then even better, like this, if it's not an ETF, it's more private, like they get the mark to model, as long as they get their coupon. But I mean, private credit's still been paying their coupons. I'm not seeing a lot of distributions coming out of private equity and venture capital these days, which they still keep marking up their IRRs like they're chugging along without distributions. So we'll see how that eventually turns out, but maybe they could catch up in the end too, for all I know.
Well, and if it's anything like the issuance we've seen in other cycles, all the stuff that's currently out there is probably going to be fine. It's the stuff that's getting issued today, like mid-tariff, mid-chaos. That's the stuff I would actually be worried about. People who are out there like selling their receivables right now would be.
We have seen, and if you poke around like in the interval and the less liquid structures in private credit, you've seen a couple of stuff where people had to either gate or slow down redemptions in the last couple of years. And if you look at every one of those, it's because when you actually dig into the loans that they're doing, it's like, what are they doing with like, sub triple C, like motorcycle leases in Singapore? Like what weirdo stuff did they get into that all of a sudden they couldn't meet a 5% redemption target on a quarterly basis? Those problems are already out there and they've been happening for the last couple of years. If now we're piling new money on top of that to go out and make these loans, those underwriting standards are not going to be what they claim they are.
Yeah.
And then the other neat thing, in fairness, that you guys are both know all too well, and you're kind of alluding to it, is like, it's unfair for us to just broad paintbrush private credit. Like there's so many different flavors to private credit. Like you're saying, like whether it's
you can still find good stuff. There's a lot of crap. You can still find good stuff too.
I don't think I didn't start this with the premise that private credit is evil. I understand where it fits in the market. My thing is the liquidity laundering problem.
Yeah, my other question I always have is those like with the weird esoteric stuff like litigation financing, everything. Are we just financing these billboards from Morgan and Morgan? Have you seen like every city in the country, like they're like other local billboards and like how much they're actually spending on advertising?
It's only gonna get worse.
I know.
It's only gonna get worse.
It's all just hedge funds financing billboards for accident attorneys, right?
For accident attorneys. Well, moving on from private credit to Nora, Buck, what you got? You got something good for us?
This is it. Well, I had like it actually comes out of the past, so I have another side one I'll ask in the end, especially for Dave. But I don't know if this is necessarily a question, but something that did jump out at me when I was kind of getting back online after like traveling all weekend is that besides the strategic reserve, is you see today the Mexican government has their first day of arguing with the Supreme Court how the U.S. firearms community is aiding and abetting the cartels in their country, and so they think that the U.S. firearms industry is culpable for the problems that they have in Mexico with the cartels. And I'd like, once again, almost like we were talking about earlier, like, could we pick more taboo subjects to make everybody mad at us? It's like, could we pick a subject that's like more impossible to figure out? But I just am curious if you guys kind of any like hot takes on culpability here.
Well, I mean, we're seeing it in both directions, right? I mean, supposedly the reason we're putting on these tariffs is because of fentanyl, right? And all the, and, migration and cartels and whatever we're going to decide is the reason we're putting the tariffs on today. But I guess to some extent, hey, if we're going to lock down commerce across these borders and start getting really picky, well, okay, then Mexico's problem is going to go away because all of a sudden guns are going to get real dang expensive. And if we're really actually locking down the border, they're not going to get smuggled over either. I don't really believe any of those things because I think the southern border will remain very porous. And I think the northern border is going to remain very porous. But look, we've made this claim about pharmaceuticals. Other countries have made these claims about other things that cross borders. I don't particularly have any evidence to suggest they're right or wrong about it, but honestly, it makes sense to me. We are the manufacturer of most of the firearms in the world. If people want to start suing the United States for allowing them to just be run across borders, I guess let them decide in the International Criminal Court, which we don't believe in anyway. So like, I don't know. To me, this is mostly politics, right? It's mostly posturing. I suppose that Mexico could come up with some sort of court case ruling that says that Smith & Wesson is culpable or something like that. I don't know what that actually would mean in terms of enforcing it, other than more tariffs and more political, boisterousness. But I don't know. Do you have a vibe on like what it would actually mean if they went through all that?
Is there any evidence, like where they're not going to Walmart and buying these guns? Like where are they buying the guns, or is there any clarity on what the charge is? I don't know this yet.
Well, it's just that, the vast majority of weapons in Mexico are manufactured in the United States. I think it's really as simple as that, right? How they get across that border, other than when we occasionally, put them across the border in order to try to lure somebody into a gotcha situation, which we've done several times in my lifetime in both kinds of, both flavors of administrations, like equal opportunity, nefarious arms shipments to the South. It seems totally plausible to me.
Yeah, it's like, Matt's like, how do they get there? Well, whether that's the CIA or the El Paso police, like it's amazing how they get there.
I don't know.
Yeah, they get there in container loads and like how they get there. But like, it's very onerous or almost impossible to own a gun in Mexico, but it's amazing to like buy one in Mexico illegally, like you're saying. Like, and so that's why I'm curious about culpability. For a second there, Dave, I thought you were going to say, well, if we just close up these borders, then they won't have a problem. I was like, are you going to argue there's no drugs in prison? Because you could show the no, I knew you weren't, but like, it was just like, so what? But as somebody I have fairly close ties to some people in the firearms industry. It's just like it is a perennial question, right? Whether it's Mexico cartels, whether it's third world conflicts, whether it's school shootings. It's like, do you think there's onus or culpability to the manufacturers, or is this just a perennial human problem? And I really don't know the answer to this.
Well, and there's the whole thing too about like guns don't just go away. Like once you manufacture them, they don't just get like lost or broken or whatever else. And this is a whole, question of even like US aid when we send stuff. It's like, yeah, the military is constantly decommissioning stuff. Police departments constantly decommissioning stuff and upgrading weapons. And then those weapons are then taken at a value and sold off. And that gets a dollar value attached to it for what gets done in the process and whatever else. Like, I'm not saying we need a giant firearm recycling program that does this a little more efficiently too.
Yeah, I guess
leaks on every level.
In general, I'm enough of a libertarian that I sort of feel like, if a company is playing by the laws and rules that have been set for the playing field, then that should give them some sort of baseline assumption of good faith in terms of like, are they responsible for all the guns that end up in Mexico? It's easy to say that though, and then you like dig under the hood and inevitably there's this set of rules that didn't get enforced and that set of rules that were technically violated, but everybody does. And right. So all of these things always come back to the, well, if they were following all the rules, we wouldn't be in this situation. I'm not sure what the point is on a lot of this stuff. I'm pretty anti-gun and anti-gun violence just in general, but I also grew up on a farm. So like, I get the pieces of this. I don't know. I mean, Jason, you brought it up. Do you think they have liability?
I don't know either. Like I just tossed that grenade in, so to speak, and see what happened. But like Dave, it sounds like Dave, you're alluding to too. It's like almost like you're saying the Supreme Court almost has to hear this case because of like what we're doing with the fentanyl and the tariffs on the border.
Of course, they have to. I mean, just from a political posturing perspective,
right?
They have to.
All right, so here you go. I have multiple questions jotted down, but now I'm blazing it on this one. I think this is a skill that, Jason, you've also been practicing in the fine art of for the last few years, or maybe longer, which is spent a great deal of my life watching English football and European soccer. And a great deal of that time has been spent analyzing pre and post-match handshakes and just what goes into the two men approaching each other. And this guy coached that guy previously, and now is there a beef, and is he going to try to make this work on the field and whatever else? And then at the end, after the heated moment, the heated passion, when they choose to either embrace or hug or handshake or just brush the other person off,
glare at each other
away.
Yeah.
And it's almost a form of professional wrestling to me. Like maybe that replaced it in my heart. You know, we went from like Macho Man Randy Savage into watching like people like this do this, but I tried to go back and watch some of the Zelensky Trump thing at the White House.
Yeah,
And
that's
I
sort of where
feel
this is
like
going.
I feel like the only thing I have left going in myself right now is basically like handshake analysis. All we can.
What's your vibe? Well, you're the expert. You tell us.
Yeah.
Well, first off, I don't think I'm crazy in reading way too deeply into these things. But number two, it's like, you know, I was watching these clips as they're being represented to me of like Zelensky and Trump and this whole exchange. And I'm like, I don't know, like these guys are both professional personality, TV personality people. They're trained in this art. And now I'm starting to look, I'm like, maybe Zelensky's like really digging in on some of this stuff. There's like some Jose Mourinho black magic going on behind the scenes here. I'm like really seeding some stuff. And I almost feel like this type of weird social status posturing is a more useful framework for understanding anything I'm consuming in the media right now than any financial indicator or whatever else. I think that's my underlying question. Is your brain rewiring how you take in more of the news right now in the last couple months
Oh
or
God.
years?
I mean, I'm trying to take in less of it. That's for sure.
Right.
I'm trying. I'm not saying I'm succeeding, but I'm definitely having the intent to be much better about my information diet and when and how much I consume those things. Your point, I'm going to reinterpret your point. I think a lot of what we see in the news now can yes, be very much interpreted at a primal mammalian level, because I think we've abandoned a lot of the niceties and norms of modern society that have been established, say, I don't know, since the Reformation. And so now we're looking what it's like when human beings are animals again. And now we're just out in the open playing the status games and the posturing games and the tail sniffing and the tribalism, and the protectionism. Those are all really very Lord of the Flies ways of looking at the world. And they feel pretty appropriate. They explain more of what I see every day now than all the stuff that I learned in school.
You feeling the same
There's
thing,
this-
Jason?
Yeah, there's an interesting theme when I was at this event that we were talking about previously in the last few weeks. And I think a lot of people are feeling kind of similarly. And actually, not to call any people out, but one of them is one of Dave's Dungeons and Dragons partner. Just for the audience to know, there's a big Dungeons and Dragons like FinTwit circle. Just so everybody knows, it's a secret that Matt and I haven't been invited to. Just putting that out there. So we're not part of the secret club, but one of the members of that was
sides on our dice, Jason. Not enough.
yeah,
sides
talking
on our
about
dice.
that like a lot of people were talking about at the event was like they feel like now we're back to like power dynamics, right? Like, and that's like historically, and I'm like, when did you ever think we were away from that? Though that's what I think is part of it for me too. Is like one of my favorite philosophers is the British philosopher John Gray, and he always says we oscillate between liberalism and barbarism, and that's part of it. Is like we go through these periods where liberalism takes hold for maybe a few decades or maybe a century, but like it always kind of mean reverts, right? In a sense, like, and we need like these things to, and then we realize that we have an animal nature. I always think like man's at war with himself. Like we have our animal nature and then our society's construction to live hopefully copacetically amongst, 300 plus million people. And so it kind of goes back and forth. And then I think what you're saying more, Matt, is like, you're saying you're interpreting more as like kayfabe of wrestling is like, this is just posturing and what's going on behind the scenes. And you're trying to like double interpret, like, was this for public? Because they even Trump said, right, like it makes good
this
TV.
Makes great
like,
TV, right?
Yeah. And
I think that gives them way too much credit, man. Have you ever I don't know, I love wrestling and like I've watched like great wrestlers, not like that can wrestle well, but great performers.
yeah,
Like,
Right,
and most of them end up being very famous, like say John Cena, who just retired. And if you ever see any backstage or behind the scenes footage, there is an intelligence to how they do all of this stuff. They rehearse their promos. They rehearse these lines. They know how they're going to land. They know how to respond to the crowd. There's an emotional intelligence required to do that really well that nobody in that room had. I'm just putting it out there.
So even if you say the room doesn't have it, and I think this is, Jason, your point of like almost, I just feel like my brain is being rewired by this, and maybe I'm just trying to resist it and fight it as best I can. It's being packaged so friggin' well. So even if the actors didn't have the intent, the way that was served up
yeah,
was so strong. And as soon as I started to poke at the margins, I saw it reframed me back in two extreme. Like I saw the what I'm going to call like the liberal framing of it. That was like the, oh my God, here's this guy beating up on him and JD Vance off the top turnbuckle. And then the other version where it's like the guy in the room who's, I forget whose girlfriend and what's Russian state operative he's representing.
Do you wear a suit? That guy.
Yeah, who's making fun of like Zelensky in the outfit, and like even Trump like pushed back on it. And you're like, okay, there's this totally other reframing of how this thing goes off the hinges in 50 minutes. And now I'm in these like little clips of Windows and how it's presented. And it's just like, I'm scanning for those tiger in the brush urges and being like, I don't need to know anything else about this.
To your point, I don't watch the news at all, so it's always interesting to me what gets through to me, what people send me, right? Because all the stuff like that like got through, right? But like, and then you said, what?
Here's a Saturday Night Live cold open. Here's whatever.
Yeah, exactly. It made the cold open.
That's exactly. I get like all these clips get sent to me or whatever, and like, so it's interesting to what gets through and then how it gets framed and when it's sent. But like, for somebody that doesn't watch news, I do watch a good fair amount of like a YouTube at night. But like, that's what I'm saying. It's interesting, like you're saying, Matt, in YouTube is like the framing for each side. And maybe that shows, I guess, why I watch both sides on YouTube or something, how it gets in my thumbnail feed. But like on the thumbnails, like the framing on whether right or left will be the dramatically opposite framing of like who dominated the conversation or whatever. And like you said, how would you know unless you're just in this echo chamber? And then the weird things that were me on the few clips I watched, Matt, was not the handshakes. It was more like the knee touches. You know, somebody was like touching my knee while they're talking. I'd be like,
a lot of weird body language.
Weird body language. That was the weird one. And then like Vance also being like, apologize. Like somebody was telling me to apologize that much. I'd be like,
Rubio doing the, like pulling into the Homer Simpson hedge.
But even the staging, like the staging is different. Like the last time Trump was in office, we had a lot of like naked staging, like he felt alone. And now it's like this whole, I don't know, like sharks and jets like cohort thing of everybody's hanging out outside the corner store.
But then have you seen like the pushback? And then now, like, correct me if I'm wrong, and maybe this is just the framing I'm seeing now, is like a lot of these Ukrainians are now even more supportive of Zelensky because of what happened in the Oval Office, allegedly.
Of course.
Like,
and Europe it's like the tertiary responded that way. Yeah.
And that goes back to, he's also a media personality. Like he's trained in this art, perhaps even more trained in some of these arts. And again, I don't know who to say who had what intent going into this thing. But I feel like I'm reading all this with thinking these people and the people who are snipping this up are super, super aware. And the meta question then is...
The people clipping it up are very aware.
Yeah,
I'm not a big buyer on the 5-dimensional chess game that this is how we get focused on China by getting Europe to... I mean, like, I just don't believe it. Like,
so then how, if we know it's being served up and cut up to us and we know we're distinguishing viewers, how do we then take that? Because now I got to go talk to people all day. We're doing this on a Tuesday afternoon. Like people have been consuming this crap in these little siphoned up ways all weekend. And I'm trying to help unpack it in ways that's not destructive. I mean, to both their wealth and
my
their
answer is always primary sources, which is a really boring academic answer. But like truly, like if you're trying to clean up your information diet, as much as I didn't want to, as soon as I was the same way with you, Jason, this came in over my filter because I certainly don't leave news up all day. And the headlines were so over the top. I went and I watched 17 minutes of the whole clip. And I forced myself to watch the whole thing all the way through because at least now I can say, yes, I have an opinion on a thing that was broadcast on television. I don't have an opinion about a tweet. But honestly, that's exhausting. So I've been coming back to this great article from Cedric Chen last week of like, what is your outcome that you're expecting from this thing that you were doing? Right. And so if what you're doing is reading everybody's reaction to the thing that happened in the Oval Office, well, why? Is it making you a better investor? Are you going to make a different decision about your allocation tomorrow? Are you a talking head on the news, in which case that was your job? But for most of us, I feel like we should pull the ripcord on these things. The minute we feel like we've got enough information to have formed our own opinion, we should move the heck on.
Well, you teed up my final question to you. I want to come back to the Cedric Chin thing, but like, Matt was, I think, saying it though in a slightly different way, and I think you were hitting it right at the end, Dave. Is like Matt saying, like dealing with clients, right? The clients are going to interpret that whatever lens they have, and they're going to ask you questions about that, how it relates to their portfolio and everything, even though it doesn't necessarily, right? Like I always think about like we just always go back to like we prepare, we don't predict. We're broadly diversified, right? And like so therefore, when any of this stuff comes across the transom, it's like I don't have an opinion, or if I do, it doesn't affect the portfolio. But like Matt, that's what you're saying is clients are asking like very distinctly, like, how does this affect their portfolio? Should they be making changes? Should they be, if it's strategic reserve, or if, if we're not going to help Ukraine, like, how does this affect my portfolio? And like, I think what you're asking is like, one, I don't even know if this is true. First of all, I don't know if this is kayfabe. I don't know what the tertiary effects are this. Like, how do I even talk about this in my portfolios? Is that kind of like what you're getting at? Like,
Yeah, I think so, because I find that I'm just wholesale scraping the portfolio conversation off this. And like all
right,
I'm reading is the mammalian instincts of like, what is the feeling? What is the vibe that I'm actually taking from the way this is presented? Because that's
Yeah.
the only thing I can actually address. I can't actually address the underlying stuff.
I
because it
feel like
makes no
that's the
sense.
message of the last 30 days is
Yeah.
to pay less attention to the noise and pay attention to the things that actually get done, because there's like, it's like a 50-to-1 ratio. For every 50 crazy things, one thing has actually happened and the rest is just a lot of blow about what they want to do. I feel like this is another one of those where it's like, okay, the thing that's actually happened is Trump has pulled aid back and there was this, altercation in the Oval Office, and Europe has responded in a particular way. Those are facts on the ground that are relevant to, I mean, I don't think you should trade your portfolio on them, but those would be relevant if you were, say, trying to figure out how to price European energy. Yes, those are relevant things to look at.
It's kind of
but
like
like
when
to,
the IRS updates the tax code. Like you can only speculate so much.
Right.
And
You
until
have to
that
wait and
letter
see what it
ruling
does.
comes
Yeah.
by, you're like, all right, got to go back to the estate planning attorney.
so- and Dave, I think that's what you're saying. It's like, it's still, even with the facts on the ground or actions that happen, it's still like a Keynesian beauty contest. It's like, we don't know the ramifications, secondary, tertiary of that would
Right.
affect the portfolio too. So it's just
Right.
like, that
And
makes it
and
even
look,
more
the
difficult.
vibes matter, but the vibes matter in the way the vibes matter. And that the vibes matter in things like, will consumers go spend? Will businesses actually make investments? Will people make allocations in the Norway sovereign wealth fund to a different country? Like, those vibes matter when they turn into those actions. But boy, it's so easy to get caught up in just the kayfabe of it all.
Yeah, that's why my favorite one always is like the Jane Street allegedly SBF, when he was at Jane Street, they figured out a faster prediction model for the original Trump election. But they thought it would be if they could get that faster, they thought Trump would be bad for the S&P, so they were shorting the S&P, right? And they got the information faster on the original Trump election, so they're shorting the S&P overnight.
So
Originally
they
were
lost
up like
more money.
they were originally up 350 million till the middle of the night. It switched on them, and they had a 600 million swing, and ended up down like 250. Like, so it's just like, you don't know the secondary, tertiary order
Right.
effects, even if you have perfect knowledge. And I think our buddies at Alpha Architects, Wes Gray, they wrote a great paper years ago, like, God would get fired as a portfolio manager, right? Because it was something like, what, it
God
took
would get
Amazon
fired as an active manager.
yeah, like,
Such
and
a
rode
great
like the Amazon down 92%, but but still had like the highest stock portfolio return. So it's tough. But okay, so Dave, going back to the Cedric Chin quote, I think what you were saying too was like, it was more putting it onto Mike Green is like, okay, but tell people what they should do with their portfolios. Or what were you, I was also going to flip it back on you. If you have that passive inelastic, market hypothesis, what would you do with your portfolio? And I ask you because I don't think Matt and I are allowed to say what we do.
Yeah, no,
Legally.
I wrote this in the black hat, white hat piece I wrote last week. I'm fully invested and still very dominant on U.S. equities because I think the end state of this is a corporate oligopoly that we've never seen in the United States. I think it will make the robber baron era look silly. Like, the new Gilded Age is going to be a real thing. Now, I think and I said this 2 weeks ago too, like, I think we're going to have a bunch of reorganizing and reshuffling both the deck chairs inside the United States and globally as some of this asset allocation shifts out. But A, I can't time it. And B, I have no idea how significant the chaos is going to be and whether this is going to be, it's all over this week, or we do this again next month and then we do it again the month after that. And we just have this perpetual, one bad week every 3 for a couple of years. One bad week every 3 is still a hell of a good market, right? So like, I'm not selling any of that stuff. I'm also not buying a whole bunch of Cardano. So like, I'm trying to stay very straightforwardly invested. In my PA, where I have a tiny bit of money where I make bar bets, I will say I've made 2 great options trades. I put a good put on Tesla close to the all-time high. I closed it out way too early, but at the same time, I also put a nice call on Bitcoin, and that didn't pan out at all. So I'm probably about even on my, like, you shouldn't listen to me about any of this crap. Every time I make a trade like that, it just makes me realize how smart I was to put a very small amount of money in my PA.
Do you think like in your sense is this like very much in the Taleb Spitznagel vein of like you still want to be super long risk assets because like it can go on forever, but then maybe you have a bit of tail hedges just in case that
I
black
don't have
swan
any
does
tail
happen.
hedges on other than, I have a little, I mean, I have a very boring asset allocation. I have a financial advisor. It's just dirt, boring stuff. I have no debt. I've tried to turtle up as much as I can. And I don't have like a lot of alts or any of that stuff, but I've done what I can. But yeah, mostly I wouldn't bet against the S&P 500 being the winners when all this dust settles. That could be 2 to 6 years, but I still don't think I would bet against Palantir and SpaceX and Tesla and anybody else.
Yeah, I'm not trying to like spew my own book. I always think about like I think Mike Green in the past has said like that's why they built some of the stuff at Simplify. That was like you still want to long the S&P because you don't know how long it's going to run on, but you want some protection in place in case. But then like as Matt knows all too well, that protection line item, people tend to hate that as things run on longer as the S&P
Yeah,
goes
I
up
mean,
into
I
the
don't
right.
know.
So it's tough for people to hold that like right.
The mechanical hedges, like going into the derivatives market, that feels way too specific and timing oriented for a normal investor like me. If I had millions and millions of dollars at stake, then I would think about it more. But
Or if you were an institution, or if you were something.
yeah, but like in a
Yeah.
a fairly middle class retirement account, it seems like it's just being too clever by half.
And back to what we were talking about earlier, which is like liquidity and private credit and all
Hmm.
this stuff. Most of this is really, and this is the biggest place I see it, is where it's a psychological problem and not a logical problem. And the psychological problem is basically like, if you're working and you're saving money, your hedge is less in your financial capital portfolio, and it's way more in your human capital. It's way more in your intellectual property. It's way more in your family, your network of friends, whatever else. If something hits the fan, how are you going to reset your life? And then it's a very different problem if you're 70 years old, you haven't started your required minimum distributions yet, you've just retired. How am I managing that liquidity bucket? Because I'm halfway through, I started this project building the second home or doing this renovation. And now all of a sudden my contractor costs went up 3x what I expected. And I'm in retirement. I don't have the
Well,
income coming and I'm freaking out. And
but
that's,
but this is the other way. I mean, from a financial advisor perspective, are you talking to clients or are you hearing from clients at all about people just sort of turtling up? Because like I know I've talked to a bunch of advisors who've sort of said, yeah, the vibe from my clients is they're not buying the second house, they're not taking the big vacation, they're not buying the boat. They're putting those in, muni bonds in California while they wait it out and see what happens, right? So like I have talked to a bunch of folks on the wealth side who at least claim that they're really shrinking that spend.
I see some people talking about it. I don't know many people are doing it. I think a lot of people going, maybe we should be turtled up, or we should have done this weeks ago or months ago, should have seen this coming. And the refrain that I'm always stuck back on with this is this idea of like, because I've been a broken record with this too. It's like, you just had 2 years of above average. So like, guess what? We're always we're never average. We're wildly swinging between below average and above average. And average is the product
Yeah.
of like looking back and seeing what
Right.
was there.
You can't get away from mean reversion when you're doing it in real time,
Yeah.
because you're constantly retallying.
So in the last couple of years, knowing we're above average, is anybody who was like getting up that bank for the next few years of starting distributions or setting aside money, it was like, we had 2 years of the market up 20+%. It's like, hey, guess what? Your portfolio just bought you that addition. Well, I don't need that for 6 more months. It just paid for it.
Yeah.
Here you go in a money market earning 5. Congratulations. Ring the
Yeah.
bell. Don't sweat it when you call me and you're like, I need $500,000. I'm like, great, it's right here.
With a sharp ratio over see Matt's saying the real shit to me like Dave, I wonder if the people you were talking to are much more recency bias than just like the last 30 to 60 days where like what Matt's saying is what I'm hearing more of like people are just talking to their wealth advisors and they're like, look how much you're up in the last 2 years. You have so much more money than you thought you did, which is why Matt knows I'm long Tritunes because I just see people like retirees just buying these Tritune boats like they're going out of style, right? Like so they are actually not pulling back on the boats. They're buying more boats. They're buying second home. They're going on vacations. That's
Well, we'll
anecdotal.
see how long that lasts.
Wait, anecdotally, that's what I'm
That's
seeing. And then
that's a vibe shift. Yeah.
and then Matt, what you brought up reminds me of I remember there was a ER doc that wrote like his 10 rules to live by to like not die young, and I only remember 3 of them. And they were 1, don't build your dream house right when you retire if you're not used to construction or dealing with contractors.
So true.
2,
So
roads are for cars only. And 3, if you could pay somebody else to get on a ladder, always do so.
Those are words to live
I love
by.
it.
You're watching Clickbait. Jason Buck, tell the people where to find you if they want to come harass you on the internet with all the bad advice you gave them today.
Yeah, think of Jason C. Buck on Twitter X.
Dave Nadig, where you
I'm Dave Nadig everywhere. Nadig.com is where I write.
There you go. Matt Zeigler, Cultish Creative. Thanks, guys, for joining me. We'll see you soon.
Thank you for listening. If you enjoyed this episode, please like and subscribe and tell a friend. Matt Zeigler is a managing director at Sunpoint Investments. Jason Buck is the chief investment officer at Mutiny Funds. Dave Nadig is an independent financial futurist and hopeful ETF expert. No information in this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of the hosts or their clients.